are the reason for all of your success, and you are the reason for all of your failure. Full stop. How can you lead a team if you can't lead yourself? If your life depended on whatever it is that you're doing today, right? Would you go about it differently? Did you leave it all out there? Because anything worth doing is worth doing right.
I've got this right. I'm maybe just doing it wrong. That's the bigger, greater definition of focus for me. If you're the most determined person, but you have no idea what you're doing, hard to succeed. If you're the most focused, but you give up easily, what's the point? So to me, focus includes getting rid of the noise.
Wow, look at that. An intro video, a good one too, holy mackerel. As we continue to navigate through this clown show, mixed signals on what our starting time was. 8:30, just for everybody that is wondering, 8:30 means 8:25, just for the record. So on a going forward basis, it'll be more like 8:25. We may move it to 8:28, just sort of the build up to the 8:30 data, but I want to be on at 8:30. Seth, if you're on yet, I want to wait for this data to drop here at 8:30 because I really strongly think that retail sales is going to miss, but I'd want to potentially cover some of this long position in the 5.5, 6 coupons. So we've taken a little bit of a long position from yesterday's locks, really solid lock day yesterday. You guys are listening. We kind of took it overnight and into this number, kind of opened up really almost dead flat on 10s. We've sort of navigated our way to slightly worse. MBS is somewhere between flat to 3 worse as we head into 8:30. Not a heck of a lot of hesitation before the 2 o'clock Fed. By the way, speaking of which, won't be on live because we've got a call. I'm going to break and do a market minute though. All right. Wow. 0.9. And what's crazy is we're really not reacting to this. So much for the consumer being dead, guys. Expected 0.5, last month 0.5, came in at 0.9. Control group, expected 0.4, last month 0.5, came in at 0.7. What do you say about that? I just don't know what you say about that. I can tell you what bonds are saying about it is sort of yawn. It's like we're not, 10s are at 444 and almost dead flat on the day. Not quite understanding why we would not be selling on this number other than we're just so blindly optimistic about the end of this conflict that we don't care. I'm sorry. Now, I've been talking about this a lot, which was we've been conflict-centric, we've been oil-centric, and the data was getting worse for bonds, and then all of a sudden it's been getting better. And to me, and I don't know where you'd classify retail sales. Maybe it's like a somewhere between a B- and a B+ data point. I don't know. For me, it's an A data point. Some of these, archaic and/or convoluted data points, surveys, so on and so forth. The way I look at it is, as the consumer goes, so goes the economy. As small business goes, so goes the economy. And that might be an oversimplification of things, but I got to tell you something, 30 odd years, and it hasn't let me down, generally speaking. There is absolutely nothing to like about this number, although I'm going to dive into it for a second. Let me just make sure. The one thing I don't like about this new format is I can't tell who's on. So I don't know if Seth, are you on this thing? I want to. Okay, so you're on. Yeah. So do me a favor. I'm inclined to cover the 5.5s and 6s. Let's just make sure that we're tight. If we're at yesterday's strikes or roughly thereabouts or even better, because we did rally a little bit into the close, I think, yesterday. Let's cover those 2 long positions, please. Real quick, let's just get to yesterday's data, and then I want to talk more about. I'm going to try to dive into this retail sales number as well as talk about prep for 2 o'clock. Data overnight, PPI in the good old GB, a little hot. Again, very, very similar to what's been happening onshore, right? Retail prices down month over month, while other components might be hot. The yearly on the screws to slightly hot. Monthly CPI down big, but the annuals, and look at they sort of display arguably inflation in a much more robust way. But again, you're looking at the annual input, huge beat, right? But the monthly down big. You're going to care more about the monthlies, right? So if I look at this, to me, net, this is good inflation data globally, right? Wages missed, normalized inflation missed both on the annual and the monthly. So some pretty good numbers there. A little bit hot here, but in a lesser, in a zone of lesser importance. We get into the EU. Kind of on the screws. Got a rate hike here in NA, whatever NA is. Mortgage market missed down week over week, by the way. And then they didn't print our retail sales number here yet. Let me just do a quick refresh, maybe. Yeah, for whatever reason, Yahoo hasn't updated our retail sales numbers. If we look at the markets overnight, Asia up, Europe up, indicating mixed here onshore. Volatility, the VIX is down, Bitcoin down, oil prices slightly up, closed under $80. Crude, maybe not literally, but kind of approaching, dare I say, barreling towards 70, pun intended. Metals down, dollar up versus most other currency. Let's see if we can get a breakdown of this retail sales report. By the way, the China data has been getting worse. U.S. retail sales. All right. Let's see what FX Street says. Non-store retailers were up 12% year over year. Food and drinking places up 3%, call it. All right, let's see here what we can get from this. Retail trade sales were up 1%, 7.5% versus last year. Yeah, the non-retailers drove all of this. So let's see. Furniture, food and bev, gasoline, not super hot. Sporting goods. Yeah, I mean, just on the surface, and I'm going to have to dive into this. I'm not seeing anything that would make me want to take the edge off this hot number. Crazy enough, tens have turned positive, 443 and change. Boy, the market is either really excited about the Fed at 2:00 or really excited about this truce. I got to be honest with you. Some of the language that I saw overnight, I thought took some of the shine off of this impending resolution on Friday. I guess it remains to be seen. As I said, strong lock day yesterday. If I pull a 2-day, we rallied into the close. Into the 3:30 close. We lost a little bit, as we approached 5 yesterday. So I would expect now, absent of reprice considerations, I would think rate sheets would be in proximity to yesterday morning's print. But I would say that we are, and I'm using a bigger word than I intend to, materially lower than yesterday's close on most coupons. So how do I play today? Well, to me, the first shot was fired here, right? And as I said, I thought it was the most important shot of today. The Fed's going to do what they're going to do. If I had to absolutely guess, they're going to talk about data dependence, which arguably is what we want them to talk about, but I don't believe it. By the way, now we're positive on the day, meaning lower yields on 7s, 10s, and 30s. There are a couple coupons, particularly in UMBS, that are showing me positive on the day. I don't get it, and I disagree with it, although the market's always right. As I've called many, many times here on this huddle, hey, I think that we're going to be green by the end of the day, or we're going to be red, or this is going to age well. I just, look, I'll reserve the right to dive into this report deeper, but certainly on the surface and right beneath the surface, other than sort of the one headline anomaly that I saw, I just don't see how this retail sales number ages well. Now, here's where I caution about, and I'm going to contradict myself. I've spoken ad nauseum about if you aren't going to buy, or let me rephrase that. If you're not going to spend money during the holidays, you're never going to spend money. I think to a lesser extent, the same is true for the summer. You talk about just natural optimism, mindset, and weather affects our mindset. I'm not, inventing fire here when I say that. You wake up on a sunny day, you feel better than when you wake up on a rainy day. You wake up on a hot day versus a cold day. We feel better about ourselves as we approach the holidays, as we approach the summer, notwithstanding bathing suit and bikini concerns about winter weight. So, listen, you're spending money now, right? Until you get to that realization come July, come August of, holy cow, what did I do? And then you kind of rinse and repeat as you get to the holidays. So, I cautioned that we were early here. This rally was early, that I wasn't convinced that all of the May data was going to help us. And this is, to me, a punch in the mouth, right? And so that June data in July or that July data in August is, to me, the more important data. I'm going to venture to guess that this May report is somewhat tainted by the summer approach, if you will. Don't know that for a fact. It stands to reason. This is sort of a rinse and repeat moment for me year over year. But that has to prove itself out in my deeper dive. So if I'm going to discount this retail sales number, it's not so much what hit, but when it hit, right? And so if I'm making a bigger call, this afternoon and or the price of oil vis-a-vis a truce are the more important headlines. Would I rather, if I want lower rates, would I rather this deal get signed on Friday or us have a weak retail sales number? Absolutely would rather the deal get signed Friday. Absolutely. But in terms of the sustainability of lower rates, to whatever extent we want that, this number is bad. But it's bad, and it's really bad. But it's really bad only in the context of they were who we thought they were. We knew that there was risk on the consumer side of this summer approach data, and it manifested itself here. Not the least of which, I have to say, is this continued duplicity in the data, in the geography within our economy, and that's, to me, where the dive is, right? Is if all of this money was spent on boats and planes and Lamborghinis, then this is a meaningless data point. Because I just don't know how much that we need to talk about the fact that you have these coastal elites versus middle America, and I just don't know how the Fed solves for that. And if you haven't heard this already, and I'll say it for what I feel is like the trillionth time, that second round of stimulus, summer of 22, when it was, in theory, right, the most direct display of stimulus, of monetary policy that I think the world has ever seen. I mean, they literally deposited money into average Americans' bank accounts. Here's what they got wrong. Then the average American ran out to Gucci, blew the money, and because we have essentially 5 companies that own everything. We have, 100 people in the world that own everything. That $3 trillion or whatever went into, and when I say 1%, I'm not talking about the bullshit publicized 1%. It went into 0.1% of the world's pockets. And what that has forever created potentially, right, is, and this is, again, for those of you that followed me for years, know I'm a broken record on this. This whole game is a game of chicken. Retailers versus sellers versus buyers. That's price discovery. That's supply and demand. That's the essence of what inflation really is, right? In a very, very simplified. Well, what inflation really is how much money we print. But in a more generally accepted way, what people are willing to pay, right? And for 30, 40 years, the buyer won that game of chicken because the seller didn't have the economic wherewithal to hold out. Well, dump $3 trillion into their pockets. Guess what they have? Courage. Liquid courage, pun intended. And so when you look at the price of things now, right, it has nothing to do with input and what the cost. No, what it has to do is that they could charge it. And you have no choice but to pay it if A, you're one of that 0.1% that's on the inside looking out, right? Or B, it's something you can't live without, like your rent or gasoline or food or so on. So long story short, if you didn't lock yesterday, right, this is one of those reports that, one wonders what the Fed is going to think about it. I think that it would have been really nice for there to be a weak consumer on display ahead of this meeting to sort of back up some of the other weakness we've seen, to back up the anticipation, and in some respects, the actuality of lower gas and oil prices. I'm not seeing that you have that. I think there's an opportunity. I'm seeing 104.7 on the board on 6.5s. I'm not stupid enough to think that that's actually where we are. But Seth, if we are well within a 104 handle on 6.5s, let's cover half of that long position. What would I do if I were you today as an originator? To whatever extent that you get yesterday's rates or better, I am a bit more lock bias near term than I was ahead of this number at 8:30. I think that you have the volatility of not knowing what the Fed's going to say. I thought we were heading towards the Fed potentially saying we're optimistic about inflation. And, to whatever extent a strong consumer hurts that narrative, and by the way, it should be to a large extent. Oh boy. So yeah, if I don't know when this came out, I personally didn't see it. Trump, Iran is not final. If I don't like the agreement, we'll go back to dropping bombs. Yeah, now I say, what the heck are bonds doing, guys? Makes no sense to me. So we might be going back to dropping bombs and the consumer is hot. Why the heck are we not selling off? Well, gosh, I could spend 20 more minutes on that, but long and the short of it is maybe I feel slightly better than I felt 30 seconds ago because the market clearly wants to rally here, but I think it's not being given that opportunity. Listen, I am 60-40 lock going into 2 o'clock. I get closer to 100 as the funding date is closer. If it's a June closing, I don't know why you're not locked up by now. If it's an early July closing, I'm almost at, I don't know why you're not locked up by now. If it's an end of July closing, I still feel like the June data in July is going to be your friend. But boy, I don't know. I've got to look at this. I've got to look at this retail sales number because it stinks on ice for rates as far as I'm concerned. I'm going to drop a market minute at 2 o'clock. Unfortunately, I have a conflict. So what I'm going to do is I'm just going to sort of step away for a minute at 2 o'clock. I'm going to record a video, and Jenna is, or shortly after 2 o'clock, and Jenna's going to post it to the feed. As always, thanks for joining live. Thanks for everybody who watches on replay. Much more complicated landscape after this number today. So be careful. Bulls and bears make money, pigs get slaughtered. Have a great day.